What up? What up? Zach Bradshaw, long-winded guy. My next traded journal, I think, is number 5. After 2 years or a year or something like that. Um, but shit is going down, and I need to make this video to get my thoughts out. Share it with a couple of people that work for me. Share it with a couple of my friends, some family, because shit is going down. And people who don't know how to manage their money are going to be the ones who get screwed. And so I just want to make a little rant explaining some of this stuff. So right now I'm looking at Market Watch, or at least that's what's on this screen that you guys see. And I'm going to go through a couple of different assets, or the first one is the US dollar index, which is basically the US dollar measured against a basket of international currencies like the yen and the pound and the euro. And together, they make essentially the denominator on this. So their value, some sort of weighted average, um, is divided into the dollar price to, kind of find out what the dollar's price is compared to the world currencies or the top world currencies over time. And so right now I'm looking at the dollar index, the last 3 years of it, and you see that, kind of as you would expect, or at least I would expect, that the U.S. is slowly, fairly stable for long periods of time, but was slowly gaining strength against the world currency market over time, over the last couple of years of Trump's presidency. And then coronavirus happened, and here on the week of the 15th, you see that the trend starts going the other way. So this is the peak right here of the US dollar value compared to other currencies, which basically means that our dollars go further in other countries versus the other way around. And that helps us with trade and other things. There are some, having a weak dollar does give us some negotiation advantages sometimes, but generally speaking, we want to keep our dollar as strong as possible. And from the 15th to today, it's gone from, and obviously this is a peak right here. So maybe it's more fair to say it just went from 100, right? Because this is the highest it's ever been, and it didn't even stay there for a week, right? So let's say 100 down to 90. So that basically means that over the last 9 months or so, we have lost 10% of our US dollar value. Might not seem like a lot, but that basically means that everything that you now buy in the stores is 10%, is going to be 10% more expensive. Usually it takes a couple of months or sometimes years for that to trickle out and trickle down. But the things that they've done this year could speed it up and potentially cause a collapse. And that's part of the reason I'm making this video. So I want to show you the US dollar versus other assets as well, just to show you part of this thing. So the thing about when they print a whole bunch of money, it reduces the value of your dollars. And it's hard for people to tell because, hey, I still got my $5,000 in my bank account. I didn't lose any money. But meanwhile, when you go to the store, everything is more expensive. And, it might not happen right away. Like I said, it takes some time. But that's even worse. If it happened that day, then you could react to it and say, oh, I'm going to save all my money. But because it's like the frog that is in the pot of boiling water, or is in the it's like the frog in the pot of water, and you turn up the heat and the frog doesn't jump out, it just boils a lot. But if you throw a frog into a pot of boiling water, it jumps out immediately, right? And that's kind of what this is, where over time they devalue our currency and we don't even notice because it happens over the course of generations. But right now they just did something that is so irresponsible, and they know that they're doing it, I think. And people just need to be prepared. So again, I'm making this video. This is the US dollar index. Now I'm going to look at the S&P 500, which is basically at least the E-mini futures version of it. It's basically the 500 biggest companies, publicly traded companies in the United States, all lumped into one ETF that you can buy. So this, again, I'm going to go to the 3-year look, so you just kind of see the trend. And this is, the S&P 500 was getting more valuable over time. But you see here, this week, that coronavirus dump, as you would call it in trading, the price just dumped down in just the course of a couple of weeks. You see here that the S&P 500 got down to as low as, let's just say, 23,000. In the course of 9 months, it's gone up to 36,000. So it's gone up more than 50% from this low. Now, from this high right here, it hasn't gone up as much, but still gained more than what looks like 10% or about 10% from this high right here. So this is one measure to look at it. And hey, this is the S&P 500 going up in price. This is not, you know, not necessarily saying that, oh, that every time that the S&P 500 goes up, it doesn't mean that the dollar is getting less valuable. But this is just one other indication of that. And what tends to happen is that as world economy collapses, wealthy people in other nations move their money into the S&P 500 or the NASDAQ or other U.S. stock market assets. And that pumps up those assets disproportionate to our own economy, for example. So this can go up while everybody's losing their jobs because even more people are losing their jobs in other countries. And then their wealthy individuals are trying to save their money. So they are trying to not save their money, maintain their value. So they put their money into the S&P 500, which they expect to go up or at least not go down as much as their currency. And then they can move back into their currency when they need to. So here's the S&P 500. Here is gold. Let's look at a 3-year view again. And you see from, not quite the same week. Well, it is the same week. From the 15th, we're at about 1,500. And now we're at about 1,800. It was a little bit higher when they thought things were going to get even worse. So this right here is a 25% move off of the coronavirus bounce that stopped, in August. But overall, we're looking, what's that, 1,900? We're looking at about a 20% off of this low right here. And then finally, let's look at Bitcoin. So obviously now I'm in a candlestick chart, so it looks a little bit differently, or it looks a little bit different. But if you look here, from this coronavirus bounce, and don't worry about all my buys and sells on this chart. Sorry, eventually I'll figure out how to get rid of those. But let's just say the week of the 15th, not quite as low as this other week. Week of the 15th, let's do it from the bottom. And to where we are right now, Bitcoin has basically 5x'd, right? It's gone up over 400%, which means that it's gone up more than 5x. From about 4,000 to, at the top, about 24,000. Here, let's just say this is the real price, right? This was a dump because everybody was panicked. And you see that it kind of bounced right back to it and stayed here before it decided, okay, yes, we are truly going to go up. So even from this point, it's more than doubled, right? Over 100%, that's more than doubled, from 9,000 to 24,000, right? And this is because people, the reason gold, the reason S&P 500, the reason all these things are going up is because, people are trying to protect their value, or, potentially some people are playing risk. They're trying to make money off these things. But gold, Bitcoin, S&P 500, even though people don't realize it, these are things that are hedges against dollar or hedges against inflation. These are things that people put their money in to protect their money, to protect their value, when other things in the economy are messing up, because you can expect the S&P 500 to go up. You can expect gold to, well, at least people expect gold to go up if fiat currencies die. I don't know if it's actually true, because when the recession first comes, everybody will sell their gold to buy food or whatever, and so that will push the price of gold down. But there is some staying power where I would expect that gold would not fall as far and then bounce sooner than, for example, the dollar. Bitcoin is another animal altogether because it doesn't have as much money in it, so it moves even more dramatically off of these things. It's not just that Bitcoin can be a hedge against the markets, is that it reacts much more dramatically. Just to illustrate that point, right? You saw these, the other ones I'm talking about 10 and 20%, right? Gold and the S&P 500. In this one, I'm talking about 5x, right? But you also, when it comes to something like Bitcoin, have to worry about the downside. And in this one, you're losing 60% of your value. You're losing more than half of your money if you were to buy at the top and sell at the bottom, which you see that's, I had probably a very small buy here. Maybe I stopped out here. I'm not quite sure exactly how these trades went, but when you buy at the top and sell at the bottom on Bitcoin, it's more dramatic, in the same way that if you buy at the bottom and sell at the top, it's more dramatic. So it's not, they're not perfectly apples to apples, but this is a newer, more immature currency with less total money in it that can be moved more easily when somebody buys $10 million. Because there's trillions and trillions of U.S. dollars. When somebody switches $10 million from euros to U.S. dollars, it doesn't move the price as much as it does when people buy Bitcoin. Same thing goes for gold and the S&P 500. Those are much larger, more mature assets that it takes a lot more money to move them in dramatic ways. But these all have a similar correlation. The S&P 500, the gold, and Bitcoin, even though people don't realize that all three of those things are correlated. They're all risk-on assets that people buy when they're like, I feel like making a bet right now. And sometimes some of those things, some people buy Bitcoin and buy gold because they're worried about inflation. That's some of their fundamentals. But in a practical sense, again, when people need money, they're going to sell these assets for their US dollar value. Now, the issue here, and the reason that I'm making this, is because our freaking government is about to pass a horrible, terrible, no good, very bad bill. And if they do, well, I mean, they've already passed it. I hope Trump vetoes it, but I think they're going to overrule him anyway. It's like the worst thing that could possibly happen. They're giving us very small amounts of money and clearly just distributing our wealth across all different types of places. One of the things I saw for it was $20 million for Pakistan, or gender studies in Pakistan. Another thing I saw was like $2.5 million to count the number of amberjack fish in the Gulf of Mexico. And this is in a stimulus relief bill. Now, one of the issues that I have with this is that Trump is like, nah, screw your bill. I'm going to veto this. Send me a bill that has none of this extra crap in it and $2,000 per family. So that's better than what they're proposing right now. But really the only thing that matters is the amount of dollars that they're going to print. If they're going to print 10% more of our money through Trump's plan or through the Senate's plan, I don't care. It's still destroying our future in the same way. And people don't fully realize this. I suggest the series Money by, I forget the guy's name, but if you look up Gold Silver on YouTube, then you'll be able to find his playlist. And it's a rather long playlist, but he talks about the fall of Rome and some of it having to do with money. And it's actually, oh, here it goes.
What is a wealth cycle?
His channel is called Gold Silver with Mike Maloney, and this is something that I think we should have to watch in schools so that people understand how money works. What we're using right now is not money, it's currency, and it's what leads to lots of these problems. One sec. And I don't need to get into the weeds of all this, but it's important that people understand the basis, or if they don't understand the basis, at least understand how to move their money, pay attention to signals, and be able to retain their value. And it's not, if you do it right, you can actually make money as opposed to, just trying to save your money. But here we have this issue where, I just searched it. I haven't fully fact checked this to see everything about it. But 35% of all US dollars in existence have been printed in the last 10 months. 35% of all US dollars ever printed were blah, blah, 35% of blah. So I'm not sure that this is exactly the case. If I scroll down here and I search 35, so Google's going to serve me an answer that is kind of confirmation bias. But here it says 24%. It don't matter the exact amount. But what it means is that we are losing the value of our money. And the world economy is so precarious that the United States it acts basically as the denominator on most large international transactions. The more that we print our money, the less value it gets, and the sooner that someone like Russia or China or Great Britain or the EU can slide in and become the international settlement currency, which Americans aren't ready for that. We have such a disproportionate advantage because of the way that the Bretton Woods Agreement panned out and blah, 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 blah. I don't need to get into the weeds. Watch that series I just pulled up. And we've been able to basically tax the world through the way that the system is set up. And if these people screw it up, which it looks like they're actively trying to do. That's what I think. There's no way that these people think that they can just print money forever. Modern monetary policy that's a, just so you know, I'm not saying just like modern monetary policy like I'm talking about monetary policy. Modern monetary theory, as it's called, is a horrible, no good, just like the stimulus bill and all that, is a horrible, no good, very bad theory that people who, like, they know this is crap. They know this is BS, that they're just making this crap up. And it's a problem, especially because the people don't understand it. And so who will get left out in the rain when all this stuff comes to bear is not the big banks, not the Federal Reserve, not the United States government. It will be the people. And we're already seeing that. They're really screwing us ahead of time. And then later, it'll just be like, oh, yeah, it's over with. There's nothing we can do now. And it's a problem. Modern monetary policy basically says that real economy doesn't matter. Governments can just print money at their leisure to solve social problems. The math does not work out, right? So if I just showed you real quick, people don't know this one. I'm sorry, this one's getting into extra crap. But this is the United States debt clock. And this thing is terrifying once you understand what these different things are. And some of these is like, oh, we won't pay these debts. Who cares? Blah, blah, blah. Except for this big old number down here. This big old number down here, which nobody understands what this one is. But the U.S. unfunded liabilities. I think it's this one. Yeah, I'm pretty sure it's this one. This is how much the United States people owe the United States people, meaning police officers and firefighters and EMTs and other people who get paid, in some shape, form, or fashion by the government that we owe them for. People who work on our roads, things like that. And other numbers like how much money we owe to China and stuff like that, man, we can kind of default on that or print up a whole bunch of money and give it to them or something like that. None of those are ideal solutions. We shouldn't be borrowing from anybody. We should run our country like a business or like a household. But this number is not a number that we can just write off. And it ain't stopping. I know you see it. It's just climbing and climbing and climbing and climbing and climbing. And this is thousands, millions, billions, trillions, 156 trillion freaking dollars. US dollar market cap. So there's only 3. Is this actually true? Oh my gosh. Oh my gosh. Oh no, okay, that's the USD coin price. I want the actual. So we have 1,000 million billion trillion. There's 19 trillion US dollars in circulation. Americans owe other Americans $156 trillion. We're fucked. Excuse my language, but it's the truth. So because people don't understand this thing, this is a good thing to illustrate the point. People don't fully understand what started World War II, and this is a big issue. Germany screwed up their money from World War I because of the way that they did things. Instead of like raising their taxes to pay for the war, they just like took out a bunch of debt from National Bank and I think even other countries. And because they thought, okay, we're going to take over France, we'll just rob from France and then we'll pay back our debts, we'll be good. Well, then they lost the war. And so they just got screwed and, had to find ways to pay back their debt. And what they did is they just printed their money like crap and it was bad. Just read this Wikipedia post. Hyperinflation in the Weimar Republic, but I'm going to skip through a couple of parts of this, right? So in the first half of 1920, the mark stabilized at about 320 marks per dollar. International reparations conferences were held. One in June 1922 was organized by U.S. investment banker J.P. Morgan Jr. The meetings produced no workable solution, and inflation erupted into hyperinflation, the mark falling to 7,400 marks per US dollar by December of 2020. So, I'm sorry, not 2020, December of 22. So, first half of 22, 320 marks per dollar. Marks being their currency per US dollar. They're, like how we were measuring Dixie before. Instead, we're measuring marks in dollars. By the end of the year, this is 20 times. This has gone up over 20 times. Or I should say, their currency has been reduced to 5%. 5% of its value. It has gone down by 95%. It lost 95% of its freaking value. That's ridiculous. Meanwhile, the cost of living index was 41, meaning I guess it was $41 to cost of living or something like that. And 685 in December, nearly 17-fold. So similar to that 20% that we see with the comparison to US dollars. Maybe the US economy did well here, right? So maybe our economy was going up, not only while theirs was going down. So that could factor into this more to make it even more dramatic, because there's less than 20, and this is, I think it's like 25 times or something like that, 320 to 7,400. But if we skip down here, you can read more of this. I recommend that you do. But here's a money shot right here. Bukake, bruh. They got a loaf of bread in Berlin that cost around 160 marks at the end of 1922 cost 200 billion. That's 200 billion with a B. A loaf of bread in Berlin that cost 160 marks at the end of 1922 cost 200 billion marks by late 1923. By November 1923, the US dollar was worth, what's this? This is, holy shit. By November 1923, the US dollar was worth over 4 trillion German marks. Okay, so let's put these two together. In the first half of 1922, the mark stabilized at about 320 marks per dollar. Jeez. This is incredible. So 4, 2, 1, 0, 5, 0, 0, 1, 2, 3, 1, 2, 3 divided by 320. Jeez. This is insane. This is insane. So I don't know quite how to figure the reciprocal, but it's like their currency was reduced to like a 10 millionth of its value. Like a 10 millionth of its value. That is insane. That's like saying you had $1 that's like saying you had 100 million, or you had $10 million. And over the course of like 18 months or 2 years, that $10 million became worth $1. $13 million. So yeah, $13 million. Oh crap. Oh crap. I'm sorry. Is this right? Jeez. $13 billion. You had $13 billion at the beginning of 1922. Or marks, right? $13 billion worth of marks. At the beginning of 1922. By the end of 1923, you had $1. I thought I lost my recording there for a minute. But yeah, that's it with this one. The main thing that I just wanted to say, and I guess bring it back to the chart for the last part of this. So I woke up this morning, and I don't know, I probably woke up about right here. But when I looked at the chart, we were in the middle of this candle, and this is the Bitcoin price, right? So we were in the middle of this down candle right here. And personally, right now, I'm totally in crypto, so I don't have any cash sitting on the side to to buy back in and invest. But I would have bought right here because when I woke up and I saw this, I was like, oh, that looks like it's going to bounce. And when I looked at it, it didn't have this wick. It was a Marubozu candle in progress, just falling. I mean, it may have even been right here. But imagine a candle that looked like this. No wick on the end, just straight falling down. And when I looked at it, I was like, oh, that's probably going to bounce. And it did, right? So it bounced and it super bounced, right? If I would have had cash on the side sitting there just to buy when I woke up or when I first looked at the charts, I could sell out right now for 4%, right? And I would do that if I had some cash on the side and I would have bought here. But one of the reasons this inspired me to go ahead and make this video is because I don't even know. I just looked at this thing and said, oh, that's probably going to bounce. And I don't fully know why. I thought that I could look at it more, and I mean, I didn't even pull up anything. I mean, I just looked at the naked chart. I had no indicators, right? I didn't have anything like this on the chart trying to tell me any levels or anything like that. I just looked at the chart and thought, oh, that's probably going to bounce here. I don't need to worry about selling out in case this goes down and drops below 20 or something like that, so I can buy more. I would sell up here and then I would buy down here. But I do know that I've basically picked up this sixth sense by watching Bitcoin for the last 2 or 3 years. In addition to some Forex trading I did before that, and I also have a stock portfolio that I don't manage as a trader, but I look at the price to buy at a good price from an investing perspective. So my main thing, and the reason, like I said at the beginning of this video, this is for my team and people I care about in my life. And I just want to show this to them to encourage them to say, like, hey, start to look at charts and start to understand them so that you can know what is going on. So just to explain this, as of right now, this looks like it's definitely going to go up. It's going to continue to go up. It's either, it's fighting out these ranges, and whichever side of this wins, it's going to go another couple of $1,000s in one of these two directions. So if it breaks out above this line and stays up here, then it's probably going to go to, like, I would think like 28 or something like that, or maybe 32. I'm not sure. It could even just tap 25 and then fall back down. But I would expect it to have another big jump. And if it falls below this, it's probably going to at least come down here to 20 or probably 19.6, where this level was down here, to work through this area and probably play around in here for a while and then potentially come back up. But the longer it stays in this range, the more likely it says to me that it is going to go up. And so a couple of days ago, I told one of my friends, like, hey, what I would do, and maybe I even said this on Instagram stories or something like that, is that if it were me and I was looking to, get starting in investing with Bitcoin right now, what I would do is I'd go ahead and take my $100 or my $500 that I had to invest, and I'll put it all on the exchange, all of it on Coinbase. But then on that day, it was somewhere in here. On that day, I was like, well, I wouldn't buy all of that 500 or all of that $100. I would buy just 20% of it. So if I put in 500 into the account, I would leave 400 as US dollars and buy $100 worth of Bitcoin. And then wait to see whether this was going to go down to a lower price, like 20,000 or 16,000 even, or maybe 12,000 if we're all lucky, right? Depending on lucky, right? It depends on what you do. But the longer it stays in here, right, I might have bought more on this dip. No, I definitely, if I was first getting involved and I knew what I was doing right in here, I would put my 500 on the exchange, probably buy 50, to be honest with you, buy just about 10% of it, wait to see what happens in this area, and then probably buy another 50 in here, have a tight stop loss in case it went against me, in case this was the top. If it started to go down, I would get out really quickly before I lost, a large percentage. And then I would have my whole $500 to wait to see if I could buy down here at 19.6 or maybe 20, or maybe it doesn't get all the way down there and wants to do like a 28 or something like this area where it stutter stepped for a sec. But the longer it stays in here, the more likely it is over the long term to go up for this, when you zoom out, to look like this stutter step period, where it just paused for a little bit, caught its breath before it continued to go up. As for my opinion, this would have broken down already if it was going to break down. With that said, it could still come up here, get rejected, and if it gets rejected up here solidly, I might get worried again and consider getting out. But at this point, I would probably be 40% in. Maybe I would have sold a little bit up here. Maybe I would have sold a little bit up here. Maybe I'd be selling a little bit right now, and maybe I would have bought in a little bit more right here. But I'll try to be, I mean, this is being pretty aggressive, but maybe like 40 to 50% in right now, with tight stop losses, meaning that if it goes against me, I'm getting out quickly. So I'm not, these are not, I wouldn't put in a long-term position 40% in right here, right? The best time to buy Bitcoin was yesterday. You should have been buying it, you know, from an investing perspective. So this is looking at it more on the short-term trades. It getting up above 20,000 is great for the long term. It means this thing is going to run. It might run to 1 million, bro. It might keep going. It's definitely going to hit something like 35, then 50, then 100, and it may never stop. It may replace other currencies, and that's why, you know, people get into it when they feel like the economy could go bad. But I mean, when the S&P drops, so does Bitcoin. Okay, now, as far as this goes, right, if I were getting in right now, I would not buy up here, because if you just look at it, even this range, if you buy at the top versus at the bottom, it's 7%. So there's a big difference here in the price, and you know, your overall trade is determined by the lowest price you get it at. But the longer it stays in this range, the more I would get in, you know, depending, and the more not optimistic, the more confident I would feel that it's going to go up before it goes down, which is the main thing. It's going to go up, it's going to go down, it's going to go sideways. But it's setting up contingent. That's what trading is. It's setting up contingency plans to say, okay, let's see if I can ride this. If not, this is what I do. And understanding the different time frames, the different considerations, the tools, and like the stuff you see on my screen doesn't matter as much as just what the price action is doing, the raw price action. Where is the price going? What's it doing right now? And let me just refresh this so I can get rid of the indicators. And over time, understanding, and some of it for me, because I've been looking at the charts, some of it's just an inherent understanding of the charts. See, I just look at it and I'm like, oh, this thing might like just go up and tap 50,000 and be there for like 5 minutes and then come back down and be at 20,000. Like it might do like this, but even more dramatic because we're at higher numbers now. And the global situation is much more, I mean, it's much more favorable for this, right? So, you know, if you're watching this video and you're still watching it after me rambling about this, I know, you know, you're like one of my homies or somebody that works for me that's just like, listen to me, you know, shoot the shit about Bitcoin and the US dollar and, you know, American monetary policy or whatever. The main thing is that it doesn't really matter whether it's Bitcoin. I like Bitcoin because you don't have to worry about like Elon Musk tweeting something or smoking weed on Joe Rogan or whatever. You can just look at like the technicals and the shape of the price and things like that, and that's all you need to know, or you know, that's most of what you need to know in Bitcoin. But I encourage you, you know, whoever you are watching this video, to go ahead and get involved in something. It could be, you know, stocks. It could be Bitcoin. I would suggest sticking with Bitcoin if you're going to do crypto. Don't play with all that other crap because it's crap. Gold, you know, something specific like the S&P 500 or something specific like Tesla, you know, a bucket or a specific stock, or maybe playing Forex, right? Getting involved with Dixie and the yen and the euro and understanding how those work with each other. That is not only a way to make money, it's a skill to make sure that when these people screw stuff up really badly, because it can happen, screw stuff up really, 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 really badly, that you are able to jump to the currency or the asset that's going to help you retain your value. Because when it comes to trading, it's much more important that you don't lose your money than that you gain money. So just to illustrate that one real quick, because I know I have a good thing for this. So let's say the price is at $100. Let's say it loses 30%. So let me get my bar back. We are down to 70%. Okay. Now let's say that we gain 30% now from the 70, right? So that seems like you'd be breaking even. You lost 30%, now you gain 30%. But let's see what happens. So what we need to do is multiply this by 1.3. And now we're only up to 91. So even though you lost 30%, then you gained 30%, you're still down 9% total. And that's just the way that numbers work. So it's much more important that you don't lose money more than you gain it, right? Because that's the issue with them printing money, is that we're losing our value. I think it's since 1980, maybe it's 1971. And there's another, if you do end up watching, that Hidden Secrets of Money thing, I would suggest this as well. What the fuck happened in 1971? You should check this out and maybe figure this out, look into this more, and be like, that's awful weird. And any politician that would ever look at this and understand it, and then still think that we should, do stimulus bills or do any type of bailouts for big business, they're just full of crap. Either they're a buffoon, or they're bought and paid for, or they just know, hey, I can benefit off of this, so they know how to play it the proper way. But I think it's something since 1980. I think 1980 median household income was something like $51,000. In 2015, I think it was like $59,000. So in the course of 35 years, gained 8,000, 9,000, let's say. In the same amount of time, car prices have gone up, I think, 3 times. Home prices have gone up 2x. Things like bread have gone up 4x. Rice have gone up like 4x. I think gas has gone up like 3.5 times. So again, it's like the frog in the pot of boiling water. Because this happens over generations, we don't understand. But it's things like my grandfather being able to walk meters, walk power meters, if you know what that is, deliver mail and mow yards, and own a rental house to give to each of his grandchildren, like 7 of us. Meanwhile, college graduates today can't even, are like, there's no way I could own an extra house and rent it out or whatever. And, obviously they can. There's ways for them to figure it out. But because it is possible for some people to still get successful, it's easy for people to look like, oh, well, it's still possible. You just have to work hard. But like, it should be easier for everyone. It should be much more accessible for everyone. And it's because they do things like this that devalue our currency. It's honestly because we're not on something like we don't have real money. We have currency instead of money. We're not on a gold standard, or maybe a Bitcoin standard might be able to do it. Or maybe we can have something like Dixie that could be our underlying currency for the world, and they never print anymore. But that just won't happen. They'll print it to do fuck shit. So that's it for this one. I'll go ahead and shut up. If you are somebody that works for me, I'm sorry I made you watch this whole long thing, but hopefully it sparks your interest, maybe gets you a little bit fearful, and makes you, and motivates you to look at this stuff. If you're somebody else, maybe my mom or one of my friends I sent this to, thank you for making it this far. Listen to me ramble about some money. Hopefully it is helpful to someone, and I'll probably start doing this again because it's about that time. And my turn's been looking pretty darn good. I just ain't got time to make videos about it. So thanks for watching.